It's about that time of day again. My name is Joseph. It's Wednesday evening, October the 3rd. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this theme with oil, crude is bullish, but the combination of a channel and a measured move overshoot is giving me the feeling it might just be better to wait for the collapse back down tomorrow morning. Get a great looking chart on oil. You're going to want to stay tuned for that. How about some S&P? S&P is bearish and back to the low of the range. Some staying patient for selling opportunities using buyer failures up above those highs tomorrow morning. Nasdaq is bearish and almost at those lows. So I'm trying to find a two-try failure pattern before we get there tomorrow. Gold is bearish after a successful 1, 2, 3 breakout of the overnight range. So I'm looking for selling opportunities, and I'm using the high of a hidden channel tomorrow. And we can't forget about the euro. The euro is bearish with a strong spike lower, and that tells me to look for a shallow pullback in combination with a key reversal line for selling opportunities on Thursday morning. Well, we're back at it again this evening. This time we're looking at some strong trends, a few trading ranges, and a possible big reversal on the chart tonight. As always, I got a great newsletter in store for you guys and gals. Got a bunch of opportunities as we get closer to this holiday weekend. Before we jump into those charts, though, and put the plan together for Thursday's session, I got to remind you, if you're watching me this evening on YouTube, you can find a detailed description of this entire trading strategy. It's written out right here on my blog at Sideways Markets. I'll leave all the links in the description of the YouTube video. Also, don't forget, if you have any questions about anything covered in this video tonight, please remember to post those questions in the comment section below. And if you like what you see, please don't forget to support this YouTube channel by subscribing, and make sure when you do, you hit that bell icon so you get notified every time I post another video. And of course, if your goal is to become a consistently profitable trader, you can get your transformation started by going right to our blog here at sidewaysmarkets.com and joining our mailing list. You can also download all of the charts from today's video right below the video tonight on our blog. Again, on the blog here at Sideways Markets. Just look below the video and you can download all of those charts. And then don't forget, you can always call us anytime, right? Call us anytime. It's a toll-free number in the upper right-hand corner. And we usually have live support active. I'll have to restart that live support server. But usually, though, you'll be able to use that live support tool to type in all your questions as well. All right, guys, great to be back here with you guys and gals here tonight. I hope you guys had a great Wednesday. Tomorrow's a big day, though. And as always, right, we're only as good as our next opportunity. So let's jump in. Let's put the plan together for Thursday's session. Tomorrow morning, of course, Thursday, October the 4th. Tomorrow will probably be the last full session of trading for the week. We get the holiday weekend coming up right around the corner, right? We've got the non-farm payroll number on Friday, right? It'll be very much an early in, early out scenario on Friday because of the Columbus Day weekend right around the corner. And don't forget, markets will technically be open on Monday, I believe, right? With it being a federal holiday, though, you will see a lot less volume and opportunities on Monday. So really, it's going to be a half day on Friday, right? Couple hours on Friday, not much on Friday morning, and again, Monday being a holiday. So tomorrow really is the last full day of the week. And as you can see, we've got pretty much your typical Thursday morning with jobless claims at 8:30 and then factory orders, right, coming in at 10 o'clock. So not a lot on the schedule. You know, of course, this first week of the month, all eyes are pretty much on that employment number. So please make sure you don't forget about that. But tomorrow should be a pretty wide open day. We got some good trends to work with, some ranges to work with, and a possible reversal on the oil, which we're going to jump in just a few seconds. So not that much on the counter tomorrow. Full day of opportunities ahead of us. Half day on Friday, and I'm not sure if I mentioned this earlier in the week, but I am not going to be here tomorrow night. I've got a series of meetings lined up tomorrow into Friday, so I'm not going to be here tomorrow night for the nightly newsletter. You know me, I'm usually pretty consistent with this nightly newsletter, but tomorrow night I will not have any newsletter, so unfortunately I won't be there to give you the guidance for Friday's session. But not to worry though, as a client of mine, you'll know exactly what the plan is because we always have that strategy working. Let's jump into our charts. No major news to worry about tomorrow. Pretty much a wide open day. Get jobless claims at 8:30, and again, no newsletter on tomorrow evening. Let's jump into those charts here right now. We got crude oil, S&P, Nasdaq, gold, and of course, we'll wrap it up tonight with that mighty euro. Crude is bullish with a channel and a measured move on the chart this evening. Now, the bulls have clear control, telling me to look for buying opportunities using support levels tomorrow morning. You can see the bulls are obviously in control of this momentum. But there are two things here, the channel and this measured move. First of all, is this channel. We have that channel rotating higher, and the first thing that stands out is, look at that, Look at that big overshoot at those highs. Now, an overshoot of that high, the pendulum, kind of that pendulum swing, we swing up above it, we should swing back down now. The moral of the story is that when we have a relatively large overshoot of the high of a channel, most often we're going to be hunting for an overshoot on the opposite side. This is very similar to a pendulum swing that you would see on a trading range, which we've talked about quite a bit lately. So the bottom line is, that overshoot up top is so large that by the time we rotate down, this momentum's not going to be bullish anymore, It'll be very difficult for us by the time we get that overshoot to call this a bull market. Now, we also have a measured move here. One leg up, two legs up. Now, this is also important because the measured move is acting as resistance at 76.49. And I'll tell you right now, I can't even count how many times we've seen a market go through the measured move, pull back, and then kind of get stuck here, as resistance. I can't tell you how many times I've seen these measured move overshoots that then come back and they can't quite get back up to retest that high. Remember, what's really happening here is you get that big run higher here, and the buyers are going to want to go back up to retest that high at 76.90. But if they have this measured move, standing in their way, the odds are pretty good here now. We're going to go up, try a few times, and then collapse to finish off that overshoot. So yes, the momentum right now is definitely bullish, but when you combine the measured move resistance with the overshoot of that channel, you can clearly see the potential for a reversal tomorrow morning. So let's play both sides of this, What do we need here? What if price goes up? What if price goes down? What if it goes sideways, And what happens if we get that reversal, What would that look like? So first of all, zoom in a little bit closer here on this. And as we zoom in closer, the most important thing right now is this strong move higher. That strong move higher means we really don't even have to pull back to the low of this channel to get another round higher. When momentum is this strong like this, there is that fear of missing out. And typically when you see those strong runs in one direction, typically by the time we pull back to that moving average, we'll see one try, a two try failure pattern just to see it rush back up to retest that high. So that in the short term is what you'll be looking for. And so you can see right now, strong move up, we're back below that moving average. And normally I'd be looking for a two try failure. One try, two try, So one try, two try, and then look for that run back up to retest the high. But look, you're buying right into that measured move. So this is definitely not the reliable two-try failure pattern. It's just not in a great location for it. So that would be the ideal, but that measured move doesn't make this very easy. Now, ideally, we go pulling back to the low of this channel, So now we pull back to the low of the channel. We're keeping our eyes on that measured move, We get that another leg lower. Now we have one try, two try, and up from there. So this is a definite possibility here with the appropriate signal. We get the sellers trying once, the sellers trying twice. Now we've freed up enough space here to at least get a little scalp off here before we get back to that resistance and then try to run back up to retest that high. So we'd like to get a pullback here, but it's going to really have to set up nicely off the low of that channel. And again, we're going to really have to make sure we can get in nice and low here, because you don't want to be buying into that measured move because it's acting as resistance. So that's the idea if we get the pullback, right? One try, two try, and then again with the correct signal, right, we're looking for that two try failure going higher. Now, I would normally say to look for that two try and then a pullback here. Right? I would normally say to look for that one try, two try failure, right? And then into a hidden channel pullback pattern. But as you can see, that's going to be difficult to get, right? Because of that level of resistance. Now, the other option would be for the two try pullback, or the pullback pattern would be seeing something like this. If we don't pull back and we jump up here now I can use that measured move, right, as support for that retest of the high. So that's going to be an easy area there to find that what we call a hidden channel pullback pattern. So really right now it's either going to be the two try failure. We can't take the failure though. We got to wait to get above it and then buy the pullback using the measured move. So it's called a hidden channel pullback pattern. Right? That'll get us above that level of resistance. Hidden channel pullback pattern. You can see how I draw that up. Or we've got to get one try, two try, get that below the moving average, and then get a real, and again, this signal here is going to be a bit tricky because we don't want it to be too large because that's not going to work, right? We need it to be just right? Like, what's her name in the three bears, right? One's too soft, one's too hard, one's just right. We're going to have to see a good looking signal candle there. And honestly, we may not get it because of that level of resistance, and this thing may roll over. So what does a rollover look like? Well, we're going to see what a reversal looks like on gold a little bit later on in tonight's video. But the bottom line is we've got to see some momentum going back in the direction of the bears. I want to see it jump off this moving average. And again, I'll show you what this looks like on a real candlestick here in a second. But we're going to need to see some jump off that moving average. Right? Got to see some personality off the moving average. If I can get a nice strong breakdown and then jump off that moving average, now what I'll do is I'll go out, line up these lows, find those highs, and now we'll look for that sell basically going down to, right, that pendulum swing. Right, depending on wherever it is right now. Right now, it's pegged at 75.39, but the idea will be once we get closer, we'll probably have this level probably somewhere up around this 75.50 area, right, give or take. So we'd like to see this strength, pullback strength, get that reversal, find that new channel, and then we look for that sell, right, as we go lower. If these bears can take control of this market with getting a little bit of personality off the moving average, again, look at how the market jumped off the moving average as it went higher. That's exactly what we need to see, jumping off the moving average as we go lower. Then we can line up those lows, find that high, right? We can sell off that hidden channel. And at this point now, the target is all the way back down to retest that low from earlier on in today's session. So far we've talked about channel overshoots, overshoot, measured move overshoots, right, where it goes up, pulls back, can't quite go, and then collapses, right? We've talked about two try failure patterns. We've talked about hidden channel pullbacks, right? And we've talked about the 1, 2, 3 reversal, right, into sells going back down. At this point, that's the plan I'm looking for tomorrow morning. But you'll notice I'm really just speculating on this right now. So if you're a relatively new trader and you want to learn more about what those patterns really look like real candlesticks, real pattern examples, the best way to do that is you could go back and watch all my previous videos, but I'm going to give you a big shortcut. I'm going to drop a free trading class class in the upper right-hand corner. You'll see that little button pop up here, right? Grab that free course. Not to worry. Pause the video. I'll be here when you get back. Grab that free class, and you'll see literally hundreds of examples of these two-try failures, overshoots, right, and everything in between. If you're on the blog right now, there's a link right below the video on the blog. So just look below the video on the blog, and you'll see that link there, right, to grab your free trading course. It's also in the description of the YouTube video as well. So that's the plan here, right, for those buys. Now, don't forget, if we go back up and we retest that high, don't forget that becomes a trading range now, and we want to focus on buying the low, right, of that range, right? We saw an example of that today. I believe it was on gold, right, where gold had that double top, right, and then we're looking for that buy off the low, right? Never really got it, but the reality is if we do go up, retest that high, right, and pull back, watch out for that possible trading range, and then we'll look for the buy off the low of that range using that one try, two try failure pattern. So grab that free trading course to learn more about the patterns. And again, don't forget, this is just the prep work. We'll be executing this strategy tomorrow morning in our trade room with all of our advanced members, and you can learn more about that on our website. Let's keep going. How about some S&P? S&P is bearish. Yeah, obviously bearish. We get a trading range, a hidden channel, and a resistance trend line, a reversal line, and a measured move on the chart this evening. The bears have control. That's pretty obvious, right? And that tells me to look for selling opportunities up at resistance levels tomorrow morning. And there's really no better level of resistance than the high of a hidden channel, right? So mark up those lows. I call these hidden channels, and these are very, very effective when a market reverses direction. Right? You're not trying to chase after it. You want to wait for that nice deep pullback, and I can look for that sell off the high, right, of that hidden channel. Right? At the same time, I also have a resistance trend line coming down. Right? That's going to be a great spot. And then, of course, we've got prior swings. Got a reversal line here at 35 3/4, a prior swing at 32, right, and 3/4. And, you know, why not, just for good measure, we can line them all up together. The high of that channel, right, reversal line, battle zone, trend line, right, that whole area right there is a beautiful spot to look for some selling opportunities going back down to that range low. Now, if we don't pull back, if we keep pushing lower, the momentum is going to be too strong to buy, right? We have that trading range. Whenever we have a trading range, we want to buy low, want to sell high, right? So anytime I see a trading range, I know to buy low, I know to sell high. The problem though is if we keep going lower here, right, this momentum is going to be way too strong to be a buyer. So if we do keep going lower, then what to do is look for basically what I call a two-try failure, right, into that breakout pullback. So imagine now, right, we keep going lower now. We pull back to the moving average, right? We pull back to the moving average. I let those bears try once, bears try twice, right? This, of course, being the one try, two try. And the hard part at this point is the momentum is way too bearish, right? We can't exactly buy like we would, like we would if we were going higher, one try, two try, and sell back down, right? That's relatively easy. You can see here, right? One try, two try, back down again. The problem is if we keep going lower here, that momentum is way, way too strong. So what I'll do is I'll look for that failure for the bears rather than trying to buy above that high now, right? That'd be your two-try failure. I'll look for that pullback, right? Look for that pullback and buy it as it goes back up from there. So ultimately it's buy low, sell high with the clear preference of selling high right now, right? We'd like to go up to the high of that channel, up to the, right, to that reversal line, that trend line. I want to get up to the high of that range. And so when we get there, it'll be very similar to this pattern we just saw, right? We'll go up That's one try for the bulls. Moving average comes over. Let those bears try a second time. Let the bulls try a second time. That's one try for the bulls. Two try for the bulls. Once we know the bulls have tried twice, now we know exactly where their stops are, right? Now we know where it starts getting painful for those bulls, and we can look to sell right into those stops for that move going back down again, right? So I love to see this price bounce up, one try, two try, and then back down right into that range we go. As we go lower here, this is where things are going to get a little bit tricky, because we want to go back into that range, but the momentum of the market will just be too strong. So what we're looking for is if we can keep going lower here, one try, two try, mark up that high, and then we're literally looking for that breakout, pull back, and go, right? And we'll look for that run off of that low, right? It'll be mark up those highs, that low, right? That little hidden channel pullback, right? Back up as we go, right? So as we go lower here, one try, two try, not the aggressive two try failure, but the breakout pullback, the hidden channel pullback here, right? Being the buyer back up. Don't forget, stay away from that middle, sell those highs, buy those lows, right? And then what does a breakout look like? What does a range breakout look like? A range breakout, you can see a real good example of a range, what was potentially a range breakout, a strong move up, a pullback to the moving average, and a continuation through that high. We didn't get the continuation earlier this morning and see it collapse back down again. So what we're looking for here is a strong breakdown, a pullback to the moving average, and a continuation off the moving average. Okay, if we get that, then we look for that new channel, right? And we're selling off the high of that channel, right? That hidden channel, that new spiking channel after we get that 1, 2, 3 breakout, right? 1, 2, 3. So anytime we see a strong move outside that range, that is not a guarantee of a breakout. We're going to wait for it to pull back to the moving average and then see how they react. A lot of times they'll go right back up, double top, and then collapse back down, and we're looking for that sell as we go right into the stops of those buyers. And obviously, again, if the buyers can hold that pullback and really run, now that is a successful, what we call a 1, 2, 3 breakout. I can mark up those highs, bring it down to that low, and look for that buy off of that low, right, as we break out of this trading range. So we're buying low, we're selling high, we're avoiding the middle, right? The hardest part about ranges are sitting on hands when we're right in the middle of the range. So stay out of that range middle, buy those lows, sell those highs, and we'll try to keep going back up, right, or back down into that range. Let's keep going. From the S&P now over to the Nasdaq, the NQ is bearish with a trading range, a hidden channel, and a measured move on the chart this evening. The momentum is clearly bearish right now, so I'm looking for selling opportunities up at resistance levels, such as the high of this range, such as the high of this hidden channel, right? That all acts like great levels of resistance. If we don't get the pullback and price pushes down to the low of the range, then, like I mentioned on the S&P, momentum will be too bearish just to be a buyer on this. We'll want to wait for that momentum to turn, right? So to do that, looking for that 1 try, 2 try, and then again, breakout, pullback, and back up we go. Here on the Nasdaq, this is the same range we've been dealing with all week. Right, we've gone up, 1 try, 2 try, back down. Didn't get the follow through here, right? 1 try, 2 try, back down into that range. Now here we are again, lots of bearish momentum right now. As we go lower, would love to see us again pop higher here. I've got this new trend line drawn on, find that new channel, would love to go up and sell off that high. I'm really watching the top of that range, want to go up, let those buyers try once, let them try twice, and then we know where their stops are. We can be selling into those stops, right, as we head back into that trading range, right, tomorrow. Slightly different approach as we go lower. You can see an example of it right here. 1 try, 2 try. Again, you really can't, because of all that momentum, you really can't trust, right, that buy at that point. You want to wait for it to go up. Zoom a little bit closer on that for you, right? Wait for it to go up. You got one try, two try, right? Nice big breakout. Find that new high off that low, and you can see that's exactly what people are waiting for, right? They're waiting for that pullback and then running back up to retest that high. So nice and easy there, right? Again, we want to go one try, two try, get that moving average. Remember, the key here is first leg up, pull back to that moving average. Got to hit the moving average, then look for the second try. Then we know where those stops are, and then look to sell right into that, right into those stops. Again, whether it be the two try rule or that pullback pattern as we go. So great opportunity there to sell with momentum. If we do go lower, one try, two try. Again, I'm not quite in the mood to be buying into that momentum. So what I will do is wait for that jump, get back above the moving average, find that new hidden channel, right, and then look for that buy off the low of that hidden channel, very much like we saw, right, in that example, right, from the overnight session here tonight. Stay away from that middle, buy those lows, sell those highs, right, and again, use that two-try rule tomorrow. And don't forget, as we talk about the two-try rule, we talk about these hidden channel patterns, right, don't forget that free trading class. We'll walk you through how to find all these the right way. It's linked up below the video on the blog, in the description of the YouTube page, and of course it's linked up in the upper right hand corner on that information icon in the upper right hand corner. Let's keep going. So Nasdaq is range bound, S&P is range bound, both with a bear bias. How about some gold? Now gold is bearish with a hidden channel, measured move, and a pair of trend lines on the chart this evening. The bears have clear control right now. The bears definitely have momentum at their side, right? After we saw that 1-2, right? After we saw that retest or a failed retest of that double top high. And anytime we see a trend reverse like this, as I mentioned earlier, we go looking for a hidden channel. And you'll notice how that hidden channel is just begging right now to be used as a level of resistance. So this is a little bit of what's the word here? A glimpse into what oil may look like tomorrow if we can get that reversal right on the oil, right? So as the oil starts to separate from the moving average, we can line up those lows, find those highs, and look for those sells right off of those highs. Now, keep in mind, if price pushes lower here, we have this trend line coming up. And that trend line's right around this big round number at 1200, right? It's a big old trend line. That trend line's coming off, right? Quite a bit of information down there. So you're going to have a lot of traders that will see that big round number, right? And they will see that rising support trend line. The moral of the story is, if we go higher, it's relatively easy, right? Failure back down again. But if we keep grinding lower here, it's going to be even more important for us now to really try to get up so we can sell. Just because you don't want to sell, I don't care how good your pattern is, you just don't want to sell into that rising support, because my rule is anytime you have at least 3 touches of a trend line, right, 1, 2, 3, and you can see for yourself, right, there are right, more than 3 touches here. Actually, yeah, about 3. 1, 2, 3, right? You might even draw a little bit steeper there like that and get 1, 2, 3, 4. So just got to be careful, right? Got to be careful here. As this market goes lower, you're going to start running out of open space here, right? So we know we're bearish. We want to sell at resistance, right? I've got resistance at that reversal line, the low of that range. This area right there is a great little resistance area there. But really what my goal is to get this trend line up to trend line, right? And then what I'm also doing is adding this one in. You can't really see the low there, but that's creating that one as well. So that's my sell area up top here for tomorrow. When we get up there though, right, we get up there, we're going to be above the moving average. And with us above that moving average, we can almost guarantee we're going to see buyers trying to buy that pullback. That'll be the 1 try, the 2 try, and then we can look for that sell going back down to that low. You have to assume that 1200 will be an easy, quick target. And then from there, we'll definitely leave a portion of that trade to run, because as you can see, right, we had a big run up, not in today's, but yesterday's session, right? Earlier on, right, earlier on this week. And I would imagine if these bears can push through this 1200 area, I would imagine that 92, 93 area where you can definitely tell there was some overlapping candles and quite a bit of volume changed hands there. I would imagine that's going to be a big target for those bears tomorrow. So we're looking at this as a bear market. We want to go up, one try, two try, and sell back down. Again, we'll be above the moving average up there, so we do want to look for that buyer failure, two try failure pattern. If we go lower, right, if we go lower here, if we try to run lower, right, if we try to run lower, now it's going to be so important that we still focus on selling high, right? So get that price up. Again, get above that moving average. One try for the bulls, two try for the bulls. Now we know where their stops are, and now we have the wheel greased to run back down, right, to retest that high. How do we turn bullish? What would a bull market look like? Pretty much the opposite of what we're seeing right here, right? It's separation away from the moving average below. I want to see strong move up, pull back to the moving average, and then jump as we go higher. If we can see some good separation away from that moving average, think about it right now, every time we get above the moving average, the bears just keep on taking it back down again. That's how you know this market is in the hands of those bears. If we can get above the moving average, of course, I'm not going to try to buy that pullback. It's not bullish enough yet. But if we can hold that pullback and jump, well, now I can mark up that level. I can mark up the new channel, and I can look for that, right, for that buy to finish off that retest of the high. Make no mistake about it, though, guys. The goal for the bulls is to retest that 1211.6. That is the market's objective. And the market's objective tells me I do not want to buy into that high. So if we can get that 1, 2, 3 reversal, hurry up. Find that level of, right, find those levels of support. We can even use that as a level of support, and we can look for that buy. You want to get it as close to the low of that range, around 1206, and really try to get in as low as possible before we get up to retest that high, because you don't want to be buying into that high. So it's going to be a bit of a threading the needle here, right, to get long on this. It may ultimately be easier to wait for it to run back up and then try to wait to be a buyer at the low of this range again, right, using that two-try failure pattern. So again, it will be a bit of a needle thread, trying to get it through that eye of the needle tomorrow as it goes higher. Right now, though, the easier money is going to be looking for those buyers to fail and sell it back down again. And then wrapping up tonight here for the week, again, as I mentioned in the introduction, I will not be here tomorrow evening, right, for the tomorrow night's newsletter. And of course, Monday is a holiday. So to finish up for the week, and of course, getting ready for a great day tomorrow, we'll wrap up tonight on that euro. The euro is obviously bearish with a strong spike lower into multiple measured move support levels on the chart this evening. The momentum is clearly bearish, that's obvious, and that tells me to look for selling opportunities up at resistance levels. Now, one of the most common mistakes that I made as a new trader was always waiting for these big channel rotations, right? There's the big channel right there. I would love to think that we're going to rotate all the way back up to the high, and then we'll get this beautiful setup to go back down to those lows. But unfortunately, those textbook examples, well, they usually only happen in textbooks. Probably not going to see a full rotation back up to the high of that channel. The strength of this strong move down says it's hard to imagine that sellers are going to allow this to get much more than just a shallow pullback off these lows before they come in to smack it back down again. So our plan is pretty simple. I want to look for selling opportunities. I'm going to use whatever resistance levels I can use, right? Such as that reversal line just above 15,700. I've got this trend line coming down as well. So that area is definitely on my radar right now. I don't want to sell too low down here because we had this measured move being hit. We had this measured move being hit. There's clearly a lot of support down there, and it looks like the way that candle closed today, it looks like they really saw both of them. So I don't want to sell too low here. I want to be a seller, but I don't want to sell low. So usually what happens in these type of situations, when you see those big strong moves down, we mentioned this earlier on oil. A lot of times what will happen is we'll go back up, we'll go just a little bit above that moving average, just enough to give those greedy buyers, right, the opportunity here to try once, try twice, once and twice, and then once we have that 2-try rule, we can then sell the sucker back down. If we have enough room for it, though, we can then look for that hidden channel, and we can look for that hidden channel pullback. That will all depend on, right, where we get that pullback. So I don't want to sell into that 15,500 area, right? You want to kind of get up off of this low and then go from there. Now, don't forget, if we do go up and fail back down again, watch out for a bounce here, and that will create a range. So we'll look for that sell off the high or sell up at resistance. If we bounce off the low, right, again, like we saw on the gold here today, right, then we want to look up top here now and wait to sell 1-try, 2-try off of that high. If we keep going lower, right, if we keep going lower, we get that big round number, that juicy round number, 15,000, right, the big round number, psychological level, 15,000, 10,000, right, those types of big psychological levels. So if we do keep going lower, right, if we keep going lower here, then we know they're hunting for something bigger. And if that's the case, keep your eyes out for a spike in channel. If we get the spike in channels are easy. Wait for the pullback, traps into failures, and then back down we go, right? You're selling traps, you're selling 1-try, 2-try, failures, right? Traps into failures, and then back down again. So if we keep rolling lower here, watch out for a spike in channel. Eventually, these bears will grow tired, and they'll wait for a pullback, and we'll be right there to get that small risk, big reward with momentum, right? Those are those A+ patterns that we always look for. Going with the direction of the market's momentum, incorporating some level of support and resistance, right? And then getting the proper entry that allows us to risk small, right, to earn large. So if we do keep going lower, we're still waiting for the pullback. Nothing much changes there. What would a reversal look like? A reversal would basically look like this. A strong move up, pull back to the moving average, strong move through, right? Just like we talked about that 2-try right off of that low. This is a very good example, right, of what a reversal looks like. We see a strength, pullback strength, nice separation away from the moving average. We run into that hidden channel. 1-try, 2-try, blammo. So that's something to look for tomorrow, right, as well. So as we go, right, it's a 1, 2, 3, find that new channel, right, and now we're waiting for that pullback, whether it be a 2-try, failure below the moving average, right, or a pullback off that moving average. That will be our green light. And again, if we can get that strength going higher here, we'll look for that rally going back to the high of the channel, and then more importantly, potentially all the way back into that range, right? It seems a little bit unrealistic right now, but who knows? Right? These days, anything is possible. Now, guys, hope you guys had a great week here so far. Got a big day tomorrow, right? Looking for a possible reversal on the oil. We got some range-bound markets on the E-minis. Strong spike down here on gold and euro. I'm looking forward to another great day tomorrow. And don't forget, we'll be in our trade room at 8 o'clock Eastern Time, and we're going to execute this plan together. To be a successful trader, don't forget, it takes strategy. It takes skill sets, and it takes the right mindset. I teach the mindset in our beginner classes, the skills you need to be successful in the intermediate classes, and I wrap it all together with my 3-step strategy, and we trade it every day in our trade room with all of our advanced members. Want more information? Call me anytime using that toll-free number. Grab your free trial and come join the trade room as a guest on a free pass, or don't forget, hit me up on live support if you have any questions. Don't forget that free trading class is linked up right below the video tonight. If you're on the website, if you're on the blog, or if you're on YouTube, grab that link in the upper right-hand corner. Guys and gals, if I don't see you tomorrow morning in the trade room with our members, I will see you guys next Tuesday evening for the next edition of our nightly newsletter. Have a wonderful, wonderful day tomorrow. Kick some butt, follow the plan, right? Make sure you wait for those A+ patterns, and don't forget to come back safe and sound after a wonderful holiday weekend. Be well out there. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.